U.S. President Donald Trump's long-threatened tariffs on Canadian goods went into effect this week. Some economists in our country are cautioning people that a recession could be around the corner. Canada is no stranger to recessions, but if the economy slips into a recession, it will be completely different from previous ones. That's according to our next guest. Fletcher Barager is an economics professor at the University of Manitoba. We have reached him on Zoom this morning. Hi there.
Good morning.
Let's start with a definition, first of all, what exactly it means when we have a recession.
Well, there's a formal definition, and usually the growth of the economy, and the economy is producing goods and services, and that's usually growing, and that's usually measured by output, and the usual indicator of output is GDP or real GDP. And a recession is when real GDP, rather than growing, is actually falling. And the technical definition is that if it falls for 2 consecutive quarters, and a quarter being a quarter of a year, so a 3-month period, so if it falls then basically for 6 months running consecutively, that's officially defined as a recession. A more informal sort of view is that even if it's fallen for 6 months and then it just sort of stagnates, so it's not falling, but it's not really bouncing back, then we would sort of say, well, that we're still in a recession, so it could actually last longer than the sort of technical definition. But that's what economists tend to look for. What's happening to growth in the economy is measured by what they call real GDP, the real measure of output of goods and services.
And how likely is it, do you think, Professor, that we are about to enter another recession?
Well, I think the probabilities are more than 50%. Again, it's sort of on and off again. Tariffs. It's not quite clear how broad that's going to be. It's not quite clear how extensive the Canadian response is going to be, but it's posing big disruption in terms of potential markets, trade flows. It's certainly going to have a chilling effect on business investment plans. And so being able to acquire goods, sell your goods, and making those decisions on new investments, those are things that drive economic growth. And so if those slow down, we could see a slowdown in economic growth. And so a recession, not next week, but say 3 months from now or 6 months from now, is a real possibility. I would say it's better than a 50% chance.
How tricky does it get for experts such as yourself to make predictions with things changing so quickly, day by day, hour by hour? Just last night we heard that Ottawa has reached a deal with most of the provinces to allow Canadian booze to flow more freely, not to flee, to flow more freely across the country, just as U.S. liquor was being pulled off store shelves. So much happening. Have you ever seen a situation quite like this?
No, there's never, certainly I think in living memory, there hasn't really been a situation at all like this. Canada has had economic recessions before. The most recent one was starting in March 2020, so just about five years ago. But that was brought about by a completely different set of circumstances. That was the pandemic. Again, it was fairly unknown territory for most of us. How long would the restrictions last? How extensive would they be? How's that going to change? All sorts of economic and social behavior. But that was very different from a situation now where it's essentially putting up trade barriers and cutting off traditional access to markets or access to suppliers. So this is very different. And the previous recession prior to the pandemic was way back in 2008. But that was brought about by financial collapse in financial markets and the mortgage market, primarily the United States. And that sort of then rippled through international financial markets, and Canada was sort of caught up in that. So the last 2 recessions prior to where we are right now have been completely different. But this one, I think, is very, very hard to predict because there's nothing fundamentally wrong with the economy that would precipitate a recession in the absence of these potential policy moves by the United States and then the responses by Canada.
When we talk about recession, often people will bring up the 80s and what people experienced during that time. How would you compare back then to now?
Well, again, I think the 80s, in some ways, the 80s was more of a, I'll say, a more classical or standard type of recession. Partly what precipitated that was that there was concern with very high levels of inflation, especially in the late 70s. And so there was a very strong policy response to try to cool off the economy and get inflation, as the phrase went, under control. And central banks were acting very aggressively, raising interest rates to double-digit levels to really cool off the economy. And they succeeded. It cooled off the economy to a pretty big extent. In Canada, in 1982, for example, real GDP actually dropped by 3.2% over the course of that year. That's a big drop. And unemployment, of course, was way up, and businesses were struggling, increased bankruptcies, etc. So, but in some ways, that's sort of a classic policy response to a previous period where maybe the economy was overheating or prices were getting out of control, and so there were some reactions to that. I should add that the 1982 recession was very deep, but the economy bounced back fairly quickly in 1983-84. We had another similar recession in the early 90s, and at that time, the economy sort of stagnated for another year, even after we were technically out of the recession. But those were more, I'll say, more classical, more conventional types. This one, again, we don't really know if the tariffs are here to stay, and if they're perhaps being escalated, then the impact on the economy is going to be deeper and more profounder, and it's going to take a longer period of time for businesses to adjust.
And who might be hit the hardest here in Manitoba?
Well, I think that, first of all, those businesses that specifically have directed a lot of their sales and their markets to customers in the United States. If that market is closed off, or essentially they're forced to try to compete with prices that are 25% higher, for example, that's going to be really hard for some of them. Among Manitoba businesses like that, hog producers, Manitoba sells about $200 million worth of live hogs to the United States. And if those prices go up to 25%, American buyers will look elsewhere. So those businesses will have the hardest impact initially. Secondly, will be other Manitoba manufacturers that are importing various goods and services from the United States that are maybe using those for inputs in their production processes. If there's countervailing tariffs imposed by Canada, then those costs are going to go up, and so they're going to have to figure out whether to absorb those costs or find alternative sources of supply, and that's going to take some period of adjustment. That would be the first line of sort of businesses or parts of the economy that would be exposed. Certainly, consumers will see some things in terms of higher prices, but in general, consumers may have a few more choices, at least in the short run, or postpone some expenditures, at least in the short run.
Professor, thanks so much for your time this morning.
You're very welcome.
Okay, take care. That is Fletcher Barager, an associate professor of economics at the University of Manitoba.